Hi guys, welcome back to the channel. If you're new here, be sure to subscribe to see more videos like this one where we trade the markets the minimalist way. So we keep the analysis simple and we use very simple and clear indicators. Today I'm looking at the pound dollar on the 1 hour time frame, and I'm using three indicators: the bottom stop signal, the levels and zones, and the RSI Exhaustion. In particular, I'm going to show you a setup that I'm looking at, and I'm about to set the order, which is going to be built with the bottom stop signal and the RSI Exhaustion, and I will use the levels and zones as an extra confirmation of my setup. So let's see what's going on. So the price has moved up quite significantly. Then we got a retracement, kind of 50% retracement, and then the price has moved up again to retest this major resistance that the levels and zones is saying it is this level. So what it looks like to be is a major double top. So one top here and another top somewhere here. Actually, we got a top from the bottom stop signal, so this is where exactly where I'm looking at. So let me draw some trend lines for you. The price has been trending up recently, but as you can see below from the RSI has been trending down. And this is the first rule that the first condition that we are looking at to have a setup. So the first one is to have divergence between the price and the RSI Exhaustion. So the price goes up, the RSI Exhaustion goes down. Rule number 2 is to have the RSI Exhaustion to be exhausted. So it should be, in this case, it should be green. So it is bullish exhausted, which means that the price continues to rise, but there's no too much room to go. There's no much room to go any further, any higher than this. The third condition is to have a top, and we just got one. It was also confirmed since we waited the next candle. You should always wait the close of the next candle so that you are sure that the previous signal is confirmed. So the three rules, we have all of them. So number 1, divergence, number 2, exhaustion, number 3, a top we have, so we can place our order. So the order looks like this. It starts around this level, so the entry price is around this level here. As concerned the stop loss, well, of course we have this major resistance here. So I will set the stop loss to be a bit higher than this so that we are protected if the upward movement should continue. In particular, we will be protected first by this sell area here, the sell area in red, and we will also be protected by this major resistance. And let me point out that this major resistance started from here, but as you can see, it was not tested before. So at this point, from a technical point of view, we as technical traders, we could not predict this was going to be a resistance in the future. But as you can see, it later happened that it was tested once. Not that it touches the resistance, but this is a clear signal that there is a resistance that is pushing the price down. And then right now it is being tested, so it's kind of being tested. Maybe the price could go even higher and actually touch the resistance. I just don't care because I have the stop loss higher than the resistance level. But the point is that when it started, we wouldn't be able to predict this was going to be a resistance. And this is a major feature of the levels and zones indicator, because way back in time it tells you, wait, this level, either a support or a resistance, is going to be a major level in the future. So watch out for the price action as it approaches to a certain level, because this is going to be a major level. Okay, so without further ado, the stop loss is set. Now we need to decide where to place the target. Well, if you want to be conservative, I would place the target around this level here, because as you can see, it was kind of tested once here and somewhat here, and then here, and then here. But since I'm expecting this to be kind of a, as I said before, a double bottom, so one double top, sorry, so one big top here and one other top here, then I'm expecting the price to go lower. To where? Well, I don't know where it will stop, but if the price from here moves lower, then I can confidently say that it will reach at least this level down here. So if the price moves higher, we are extremely safe because we are protected from the sell zone here and the resistance as well, since our stop loss is higher. And if the price moves lower, then we can confidently say that it will reach our target, because this level is highly likely to be visited in the future. Okay, so the order is set. We just need to be patient and wait and see what the price is going to do. I'll keep you posted, of course. I have an update for you guys. So the price is moving lower quite rapidly, as we expected. So what I did was to move my stop loss to break even. So I move it around this level. Yeah, exactly. So that if the price comes back up, I will make some money. So right now I'm in a risk-free trade. In the worst case scenario, I make money, just a little bit. In the best case scenario, I make more than 4.5x return. So what I can tell you is that I see that the RSI is dropping quite significantly, and it is also bearish exhausted. The fact that it is bearish exhausted is okay, absolutely okay, because when we are in a trade and we see a clear downtrend like this, the fact that the RSI is exhausted means that the price should move, continue to move even further, even lower in this case, without any big problem of bouncing back. So I still expect that we will reach the target. We just need to be patient and see what happens next. Now it gets interesting because the price went a little bit lower than the previous update, but now it made a bottom and the RSI is kind of moving sideways. Should we close the trade? No, at least I do not close this trade, because first of all, I'm at break-even, so I'm 100% safe. If the price moves higher, I'm still making some money. But the other point is that I do not believe this being a bottom. First of all, for the major analysis that we made initially, so you should always stick to the initial analysis. When you start a trade, you make rational decisions, technical analysis, so you should stick to that analysis unless you have further evidence that it is no more valid. In this case, it is still valid because it is true that we have a bottom, but there is no divergence. And also I want to see another bottom. I don't trade just because I receive one signal. Do you see what happened here? I got a top and then I got another top. There was no divergence, so of course I was not going to trade this top just because it was a second top. But I mean, the setup was just not there. But then we got another top, and in this case we had divergence, we had exhaustion, and we got the top. So we could effectively consider this a great opportunity. Moreover, it was just below this major resistance line. So in this case, maybe the price will move higher. I don't know, and no one can tell you. No one can tell you, because the market can always do whatever it wants and whenever it wants. But the point is that I'm 100% safe right now, and I don't see any major technical evidence that the price will bounce back. I still expect the price to move lower. I would close the trade if I see another bottom, maybe lower. Actually, I want to see it being lower than this one, so I want the price to go even lower, and then I want to see the RSI to increase. So I want to see a clear uptrend in the RSI. If I have two bottoms, one lower than the other, the second one being the lower, of course, and then I have the RSI which is trending up, clearly trending up, then, and it is exhausted and blah blah blah, then I have a setup. Right now we don't have a buy setup, or at least a close setup, so I just let the trade open, and I'll keep you posted, because this is very interesting. As you can see, the price played a little bit sideways here, and then it went just straight down, and we closed the trade. So we are now out of the trade with a 4.5x return, which is excellent. Probably the price might go even lower considering the overall price action that's going on here. But of course, we always want to play safe. We want the greatest opportunities and trade them safely. So in this case, we had a great opportunity. It was confirmed by all our indicators, which we consistently trade. So we know that they are consistently profitable, and we played the trade safely. So as soon as the price went down, at least halfway into the target, we set the break-even level to be below our entry price, so that we were 100% safe in a risk-free trade. And then we just decided to be patient, which is the only thing that you should always do when you are trading. Have patience and never get emotional. Okay guys, so that's all for today. I hope you enjoyed the video. If you did, make sure to like it and subscribe as well if you didn't already. If you have any question, feel free to ask down below, and I'll see you guys in the next video.